With more than 1.9 billion drinks served every day, Coca-Cola is one of the world's largest beverage companies. From its humble beginnings, selling a single product at a drugstore for 5 cents a glass, the company now has a roster of 200 brands that includes Coke, Fanta, and Sprite. But with U.S. soda consumption on the decline, the soft drink maker has been forced to pivot. In 2021, Coke launched Topo Chico Hard Seltzer, the company's first move into alcoholic beverages in the U.S. in almost 4 decades. The company has also made recent investments into the sports performance drink category with Body Armor and the purchase of UK coffee maker Costa. And while the pandemic has caused major disruptions, in the first quarter of 2021, Coke reported net revenue was up 5% to $9 billion.
We were very focused over the last 12 months on focusing on really improving our marketing. We cut the portfolio of brands in half. We got really focused on our innovation pipeline. We worked with our bottlers to really support the customers in new and different ways where they're open. And the sum of all that, along with a new organization we've stood up, has allowed us, as you say, to come back to the pre-pandemic levels.
Coke is eagerly anticipating summer reopenings and vaccine rollouts. In the meantime, it faces a number of challenges, including further COVID-19 disruptions and ongoing tax litigation with the IRS. In November 2020, a U.S. tax court said that Coca-Cola had to pay the bulk of its $3.4 billion tax bill. Coke said it would ultimately prevail in litigation with the IRS, but that its potential liability could be as high as $12 billion. So after 135 years in business, can the soft drink giant stay on top? And what will the secular decline of sugar-sweetened beverages in the U.S. mean for the future of Coca-Cola? Coca-Cola traces its history to a soda fountain in Atlanta, Georgia. In 1886, pharmacist John Pemberton created a caramel-colored syrup, took the mixture to a nearby drugstore where carbonated water was added and the drink sold for 5 cents a glass. According to author Mark Pendergrass, the mixture contained caffeine, lots of sugar, and for the first few years, a small amount of extract from coke leaves. In other words, cocaine.
And at first, their ads were primarily promoting it as a medicine. It was supposed to cure morphine addiction, for one thing, which it did not in Beveridge's case, unfortunately. But it was supposed to be an aphrodisiac. It was supposed to cure basically whatever ails you.
In 1888, Pemberton began to sell the recipe to a well-capitalized businessman named Asa Candler, and by 1895, Coca-Cola was available in every state in the U.S. By the turn of the century, Coca-Cola adverts were appearing on clocks, trays, and posters, and the drink was moving from soda fountains and into bottles. The company's advertising budget reached $1 million in 1911, the equivalent of about $27 million today.
And that became wildly successful by 1900, 1910. There were Coca-Cola bottling plants in every small town, not only in the South, but throughout the country.
By the 1920s and 30s, Coca-Cola had reinvented itself as an all-American soft drink and was entering new markets abroad. Exempted from sugar rationing during World War II and in support of GIs, the company sent 64 portable bottling plants around the globe, distributing more than 5 billion bottles of Coca-Cola. And it wasn't just Americans who were hooked on sugary drinks. According to Pendergrass' book, For God, Country, and Coca-Cola, in Germany, with the supply of key ingredients being curtailed due to the war, local operators invented a new drink, Fanta. The flavored beverage, the first new product from the company, eventually made its way to the U.S. in 1960. Coke produced a slew of other new innovations too. In 1960, steel 12-ounce cans were introduced. In 1963, Tab, the company's first diet drink, launched. In 1971, the I'd Like to Buy the World a Coke commercial aired. In 1982, saw the debut of Diet Coke. In 1985, in an attempt to boost sales and compete with rival Pepsi in the soda wars, the company reformulated its classic soda and launched New Coke. The move was a major misstep. With widespread disapproval from fans and pundits alike, just 79 days after the soda was launched, the company reversed course and the original formula was reinstated. And while the consumption of sugar-sweetened beverages in the U.S. was rising, during the 1990s, the company was about to face an even bigger threat. In the early 2000s, health and wellness concerns rose to the top of most consumers' agenda. soda consumption began to decline.
The peak happened around in the early 2000s from a consumption standpoint, if you look at per capita consumption, and then it's been declining ever since.
At the same time that we started to see carbonated soft drinks decline in consumption was about the same time that we started to see increased concerns about sugars and simple carbohydrates.
But despite that drop, Americans and people everywhere were still hooked on soda. Between 2011 and 2014, almost half of U.S. adults were drinking at least one sugar-sweetened beverage a day. The soda market in the U.S. is a $38.5 billion business, according to IBIS World, and includes companies like PepsiCo, Keurig Dr. Pepper, and of course, Coca-Cola. With consumers mostly stuck at home, foregoing restaurants, concerts, and sporting events, the pandemic has been a mixed bag for soft drink makers. PepsiCo announced first quarter 2021 net sales reached more than $14.8 billion, almost 7% higher than a year earlier, fueled by pandemic snacking in its Frito-Lay division and higher sales of drinks like bubbly sparkling water and Starbucks ready-to-drink coffees. With more people reaching for a caffeine fix while working out of their home office, Keurig Dr. Pepper's coffee business got a jolt too. The company announced first quarter 2021 net sales of $2.9 billion, more than 11% higher than the prior year. And while Coca-Cola saw 2020 net revenue decline 11%, the soft drink maker bounced back with first quarter 2021 net revenue of $9 billion, up 5% from a year earlier.
Coca-Cola has really been hit hard by the pandemic, and they're definitely not out of the woods yet.
Whilst there is uncertainty and volatility, particularly in the near term ahead of us, we feel confident about the corridors we're setting for the top line and the bottom line guidance, and we believe that we'll be able to emerge stronger from this crisis.
A major issue for the soda giant, according to one analyst, Coke has more exposure to restaurants like McDonald's and sports venues than its peers PepsiCo or Keurig Dr. Pepper.
What that means is they had a lot of market share to lose in those channels. And so as those channels closed, they had obviously disproportionate impact in terms of their revenues and their market share.
To make up for that loss, the soft drink maker slashed its global workforce in 2020 by about 11% and trimmed its roster of brands from 400 to 200. Tab, the company's first diet soda, was culled. But Coca-Cola has several key advantages that will allow the company to reinvigorate its business, according to analysts. For starters, Coke's diverse geographic position should provide the company with a steady stream of growth. Coca-Cola products are sold in more than 200 countries and territories worldwide. Coke also has one of the world's largest non-alcoholic beverage distribution systems and derives more than 40% of sales from developing and emerging economies with a growing middle class. In 2020, Coca-Cola had net operating revenue of $33 billion. Almost 66% of that came from outside the U.S. And in developed markets where Coke is firmly established and competition is rife, the company has proven profit growth strategies driven by innovation.
Even in the US, as soda consumption has been declining, the value of the category has still been increasing.
According to Johnson, one strategy Coke uses is price pack architecture, which generally refers to consumers' willingness to pay extra for packaging innovations. In Coke's case, it discovered consumers not only preferred smaller-sized drinks, but were willing to pay more per ounce for them. Another key advantage, Coke has positioned itself in an area of the supply chain that is less capital intensive and requires less labor and overhead than rival beverage companies like Pepsi. Most of Coke's trademark beverages are not packaged and delivered by the company. In general, Coke focuses its operations on producing the concentrate for its beverages and ships those mixtures to bottlers for processing, packaging, and distribution. In 2020, environmental group Break Free from Plastic took a global audit of plastic trash, working with almost 15,000 volunteers in 55 countries, collecting plastic bottles, coffee cup lids, shampoo bottles, and surgical masks in a 2-month cleanup. The group said that for the third year in a row, soft drink giant Coca-Cola emerged as the top global polluter with almost 14,000 Coca-Cola branded plastics collected in 51 countries. According to Greenpeace, as of 2018, Coca-Cola has produced over 110 billion single-use plastic bottles. The environmental group estimates that in the decade leading up to 2018, Coca-Cola increased the number of single-use plastic bottles by about a third, accounting for almost 70% of Coke's packaging globally. While Coca-Cola is not the only multinational corporation that relies on plastic packaging, the company's size illustrates the scale of the problem. Other top polluters, according to Break Free from Plastic, include PepsiCo, Nestle, Unilever, Mondelez International, and Mars. According to a report by the World Economic Forum, at least 8 million tons of plastic enters the ocean each year, the equivalent of dumping the contents of an entire garbage truck into the ocean every minute. Plastic packaging makes up the largest share of this problem. To do its part, in 2018, Coca-Cola announced it would use at least 50% recycled material in its bottles and cans by 2030. And by the same date, collect or recycle a bottle or can for each one it sells. The company also launched a plastic bottle made up of 30% plant-based materials in 2009. And in 2020, Coca-Cola partnered with Danish startup PepsiCo to develop a 100% paper bottle. That project is in its infancy. But critics argue that due to the high costs associated with recycling and with less than 30% of plastic bottles in the US recycled, those efforts might not be enough. Another criticism Coca-Cola has faced is over its water use. About a third of Coca-Cola's bottling plants operate in water-stressed areas, and more than 73% of the water used by the company goes to growing ingredients like cane sugar, oranges, and apples. To improve water efficiency, the company reduced or removed water use in its manufacturing process. In 2004, Coke was using 2.7 liters of water to make 1 liter of product. By 2018, it was using 1.92 liters of water to make 1 liter of product. The company also announced in 2016 that by replenishing watersheds and partnering with organizations, it was returning 100% of the water used in its drinks back to the environment and to local communities. With the pandemic slowing down its North American fountain business and its Western Europe away-from-home channels, Coke saw a 4% decline in the sale of sparkling soft drinks in 2020.
Clearly, the consumers have adapted, and the ones that I think are very likely to stick are clearly a big uptick in e-commerce. Obviously, e-commerce is much more important to a number of other sectors. It's really started to accelerate in terms of grocery, in terms of beverages. I think that will endure. And I don't mean e-commerce just in terms of what you buy to have delivered to the house, but also in the away-from-home channels, the amount of takeaway, the amount of delivery.
But it may be new product offerings that have the biggest impact for the soft drink maker. Roughly 25% of Coca-Cola's revenue was generated from new or reformulated products like Coke Zero and Coke Energy in 2020, compared with roughly 15% 2 years ago, according to Morningstar. In 2021, Coke launched Topo Chico Hard Seltzer, the company's first move into alcoholic beverages on its home turf in almost 4 decades. In 2019, hard seltzer's volume more than tripled.
Very early days for Topo Chico Hard Seltzer in certain countries in Latin America and also Europe, but we're very exciting. Good consumer reaction, good customer reaction, good rates of sale. Very early days and coming very soon to the US.
The company is investing in other categories too. In 2018, Coca-Cola acquired a minority ownership stake in sport drink maker Body Armor. And in 2019, Coca-Cola completed its $4.9 billion acquisition for Costa. Costa has over 4,000 coffee shops in Europe, Asia, and the Middle East, and offers everything from vending machines to ready-to-drink products. The coffee segment globally is growing 6% annually. And with health and wellness concerns at the top of most people's agenda, it could be innovations in the soft drink maker's traditional soda business that brings in some of the biggest gains.
There are consumers shifting towards lower calorie beverages, and we're certainly behind that trend. Coke Zero Sugar not just is growing in 2021 in the first quarter, but actually grew in 2020.
And while Coke might not recover as quickly as its peers, because much of its business is outside of the US, where vaccine rollouts and economic conditions remain uncertain, analysts say the company can expect a strong recovery.
Globally, the rate of vaccination, the rate of reopening, all of that is going to vary by country. It'll very much translate into Coke's business. And so it definitely will not be a linear recovery for Coca-Cola, but a strong recovery nonetheless, we expect in 2021.